Hello and welcome to another MCO update on FET. The FETCH.AI chart is currently trying to form a top there in this A wave to the upside. Here on the larger time frame, you see the entire structure that could that this rally to the upside could follow. You know, there's just a roadmap at the moment. And the current thesis is still, that's unchanged, that a larger degree fourth wave bottomed there around the 6th of April, 7th of April, I think it rather was. And so we have seen an initial 5-wave move to the upside. And I'm watching if we now get signals that this B wave pullback has started. The B wave should ideally land below the last swing low that formed here on the 6th of May. Or sort of, yeah, in that area, maybe a little lower, 63 cents or lower. So that's the May low. That would give us a very nicely defined corrective pullback. Obviously, the B wave needs to hold a higher low above the April low, which formed at around 35 cents. Because if we break below it, well, there is no progress to the upside. The whole idea is after we see a 5-wave move up, we are going to watch for a 3-wave corrective pullback, which should form a higher low and then typically sets the foundation and acts as a jump-off point for a C-wave rally to the upside. And then from there, when this A wave is done, so wave C of A is done, we can watch for the next pullback, which would be labeled wave B, and then we rally higher in wave C. So that could take the price eventually, and this is at the moment just very much only a guideline target. It can take us to round about $6.20. Okay, this is the 100% extension target and an ideal target for a larger degree C wave as it is on the chart. So the overall idea is at the moment that we should be close to completing this A wave, and below that we should see the B wave form soon. And then we can form higher prices from there. So it's very much to be aware that this B wave pullback could happen. This doesn't mean I'm bearish. It means that we might be in a topping zone. It's a bit too early to confirm. As you can see here on the daily chart, really the reaction to the downside is too small to be relevant. But I'd say the risk is quite high because the probabilities that this B wave starts to take shape are quite high. In addition to that, it's not bearish, and we will just pay close attention to the support area for this B wave, which I'm showing on the smaller time frame. That being said, let's go to the smaller time frame chart, and you can see here on the 1-hour time frame this 5-wave pattern to the upside that formed in more detail. Wave 1, wave 2, wave 3, wave 4, wave 5. All support areas held in this journey to the upside, and then from this area, which I've labeled wave A, we're now watching if the B wave starts. Now, I've highlighted in yellow here that we could get one more high. That's possible. I cannot rule that out. The pullback is simply too small to be really relevant. But you know, as long as we stay below micro resistance, which I've added to the chart today, I think we can make a case that this decline has started, which should take us into this support area, which I just talked about. And this support area is defined. This is our B wave support area, yeah? This is defined between 42.2 cents and 62.6 cents. So waiting for a further continuation of the decline, or let's rather say waiting for how the market reacts to resistance, because we have a 3-wave move down from the high so far. That is not enough yet to confirm we are starting the pullback, but I'm definitely on the side of caution. The risk is high because the move to the upside was technically complete. And we have a 3-wave move down, which was not substantial, but still large enough to consider maybe the pullback started. But to be able to distinguish between another upside extension and a move to the downside, I've added this resistance area, which is between 84.9 and 89.8 cents. So as long as we stay below, you could say the pressure is down. And I'm waiting to see if the market gives us a impulsive reaction to the downside, which then should take the price below this Tuesday low at 79 cents. That would be further confirmation, and we can start to really focus on this lower support area. So yeah, that's the update on FET. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.